Hey, how's it going, everyone? My name is Amos, and I wanted to let you know that there's an entire sector that is really exciting that I'm currently looking into right now and researching. And it's most likely where I'm going to be deploying my capital into next. And I wanted to share it with you because I think it's going to be a game changer. It's going to absolutely disrupt the finance space. I mean, it has been for the past 3.5 to 4 years, and I don't think it's going to slow down anytime soon. I'm referring to the buy now, pay later business segment. For the rest of the video, I'll be referring to it as the BNPL. And at the end of the video, I'll go over the major players. So this one's gonna be a little different, kind of like a market research type of content. So if that sounds good with you, let's go ahead and get into it. So what exactly is the BNPL? It's essentially loans that about half of Americans are using, according to a survey by LendingTree. And here's the kicker. Younger Americans aged 40 and younger are using credit cards less and less and are opting to choose the BNPL options more frequently. And you'll quickly put the pieces together in your head as to why here in a little bit. So when you think about it, credit cards, they earn about 80% of their profits from interest and fees paid by the consumers. Like if you take out a credit card balance of like $500 to pay for this, but you don't pay it all in full and you pay the minimum balance, then month over month, you have to pay like a penalty of like, I don't know, 12, 14, 15%, and it carries over to the next month and so forth. In sharp contrast, when you think about the BNPL space, the services earn their money by charging fees directly to the merchants, much like the toll booth networks, Visa and MasterCard. So instead of going after the consumers to drive up their profits, the BNPLs charge a percentage of the transaction. So if something costs like $10,000 and they do the BNPL option, they'll charge the merchant like, I don't know, 2 or 3% of the 10 grand. But the BNPLs also do drive about 5 to 15% of their revenue from the late payment interest fees. So if someone can't pay off their BNPL on time, installments of like every single month for the next 4 months, if they're late on month 3 or month 2, they'll charge a late fee, and they also do make money off of that. So in general, you can think of the BNPLs as small loans. However, unlike traditional loans, most BNPL transactions are not reported to the credit rating bureaus. They just keep everything in-house along with the risk of defaults. Because when you think about the credit card companies, they usually have an application process that's very thorough. You have to meet a certain threshold, a credit score, and then you get approved. Whereas when it comes to the BNPLs, they do it all in-house. They don't care about a consumer's credit score. And so for a consumer that has a really terrible credit score, the BNPL option is probably the only thing they can use. And based on my research, their AI underwriting strategy is very, very similar to the insurance companies to accept or deny you on the spot when you're about to buy something, whether it's in person or online. And the data shows us that most consumers that utilize BNPL, well, they do tend to have lower credit scores, they have higher credit card balances, and across the board, they're just very highly leveraged. So does it come as a surprise that about 41% of all BNPL borrowers are late to pay their loans? Like you would think in a happy and a perfect world, they're paying everything off on time, the full balance, but the data says that's just not the case. So as a response, the BNPL companies are now creating their own version of credit scores for their customers instead of partnering with the traditional avenue of Equifax, Experian, TransUnion, and FICO. And what makes all of this really exciting as a potential investment, at least to me, is that the BNPL, the options, the modality is everywhere. Online, offline, on DoorDash, on Uber, at Costco checkout aisles, at Walmart, at Amazon, and etc. And so as I alluded to in the beginning, the BNPL sector is kind of leaving out the middlemen, the credit cards and the credit rating bureaus. They're trying to take them out of the equation and just keep all of the profits. And by the way, when you think about how does a customer pay for their BNPL loan, well, it's directly linked to your bank account or to a debit card. Sometimes they do allow a credit card to be linked to your account, but it's not common. Instead, they like to just take it directly from your account every month or every quarter, whatever your agreed upon timeline is. So it's kind of like making an automatic online payment for your mortgage, phone bill, utility, just comes out of your bank account every month like clockwork. So who exactly is in this space? We're going to go over the major players on a high level. First and foremost is going to be Square. I guess they changed their name and now they're Block. I don't know why I always call them Square. Ticker symbol XYZ. Block is the parent company of Square, where a lot of like small mom and pop restaurants, food trucks utilize for their payment processing kiosks, but they also have Cash App, which is really similar to Venmo, but it's also the parent company of AfterPay, which is one of the more popular BNPLs. I think their market share is about like 20 to 25%, depending on the timeline where you capture that data. And if you take a look at their revenue on a high level, I mean, this is pretty spectacular. However, I do want to call out, they do run into these stretches of performance where it kind of plateaus year over year, like 2021 to 2022. And as of right now, in 2024 to the trailing 12 months, it's not exactly growing. It's actually shrinking. It's going from 24 billion to 23 billion. So this is BNPL player number one. Are they profitable? Their bottom line per share, also referred to as the earnings per share, as of last year. Yes, they are, friends and family. I mean, in 2022, it was a pretty hideous situation, negative 93 cents of profits per share. And then in 2023, it was 2 pennies of profits per share, but now we're cooking. $4.70. And the next BNPL player is going to be no other than PayPal. They do almost everything that you can think of when it comes to transferring cash from point A to point B. I already made 2 deep dive videos talking about PayPal, but their BNPL product is known as Pay in 4. So if you want the full scoop on PayPal, just go and watch those videos. And the next BNPL is a dedicated player known as Klarna, and they just became a publicly traded company as of, I want to say like 1 month ago, because right now it's October 10th. According to my time date calendar that I see on the bottom right of my screen. And I'm gonna say this right now, full transparency, out of all of the BNPL players, they probably have the worst financials out of the bunch. But I think the growth in their top line, their revenue, is just absolutely impressive. I mean, in 2016, they were generating $390 million in gross sales through the fees that they charge the merchants and a little bit from the late interest payments from the consumers. But now it's $3 billion. And if you look at the growth year over year, I think it's absolutely absurd. I mean, going from 56% year over year during the pandemic, 37% right here. I guess in 2022, it was pretty flat year over year, but right now it's still growing at a pace of 20% year over year. However, if we take a look at the profitability of this company, for a company that's not manufacturing shoes or tanks or submarines, they don't really have that many overhead costs. They don't have a lot of CapEx. So riddle me this, their net income, the bottom line as of right now, negative $95 million. This is a company that is just operating deep into the red in order to keep their business alive. They lose more money in order to make money, if that makes sense. So not a profitable company. However, the next one is going to be a lot prettier, I promise, and that is Affirm. And they partner with all of the big name retailers and merchants, and the average loan tends to be a little higher than the others because when you use Affirm, it's usually because you're buying an Apple iPhone or a smart TV from Best Buy, or if your wife participated in Amazon's Prime Day and the bill came out to be like $600, $800, usually gonna go with Affirm. Year to date, up 27%. Take a look at their financials. It's funny money, like I said, right? Look at the growth of their top line year over year. I mean, this is just absolutely absurd. Going from $264 million about 6 years ago to what it is right now, $3.2 billion. That is really impressive. And unlike Klarna, Affirm is actually, they're profitable. They generated $52 million for their bottom line, which means their earnings per share is 15 cents. It's not bad. It's not the greatest, but it is the first year that they're operating in the green. And that's why their trading multiple right now is a 483. It's still shy of Palantir. Palantir, depending on the day, it can be like 620. On a bad day, Palantir's PE ratio is like a 570. But Affirm, 483, is it justified? I think with the percentage change year over year, I can see why Wall Street's very bullish on them. And then the next BNPL is Sezzle. And I will say this, they're the smallest of the party. Their scale and reach is kind of small as well, but it's the quality of their financials and operations. You'll see in a second. And they usually partner with very niche brands that resonate with Gen Z. So if Affirm and Klarna is more popular with people that are like age 35 to 45, Sezzle tends to be more popular with like the teenagers and kids that are in college. So Gen Z. So based on my analysis, I kind of think of Sezzle as like Elf in the makeup world and Affirm as Estee Lauder. Does that make sense? Like you use Affirm Estee Lauder with more big ticket items, and then with Sezzle, you use for the smaller ticket items. And right now, year to date, Sezzle, 91% into the green. They reached the high of $186. But since then, back in July, they've just been selling off like there's no tomorrow. Currently $81. And the key thing that I want you to focus on is Sezzle's PE ratio being at 27, Affirm just shy of 500. Well, check this out, the financials. Sezzle's revenue, their top line, look at the insanity of the growth rate year over year. It is just absolutely absurd. Now remember, I said they have the smallest reach and scale because in the trailing 12 months, they're pulling off $371 billion. Whereas the other ones, clearly in the billions of dollars. I think Klarna and Affirm were both around $3 billion. But when we talk about Sezzle, the quality of the money that they're pulling off, I mean, this is pretty crazy, right? In 2019, we're cooking with $15 million and now $371 million. The percentage change in their gross sales year over year is just, dude. It almost makes me think to myself that Sezzle is absolutely undervalued, especially the BNPL sector, because how the heck does Affirm have a 483 PE ratio? But I think the big question is Sezzle profitable or not? And as we scroll down, take a look at their bottom line per share, $2.93. I would say they're so much more efficient than their peers that are bigger. And the clear difference here is Klarna, they're not profitable, right? But Sezzle, they've been profitable since 2023. $2.93, and the growth rate of their profitability per share, 146% year over year. I'm pretty impressed. So my question to you is, which of the 6 BNPL players do you want me to do a deep dive on first? Because I think all 6 of them are pretty exciting. And I'm not gonna lie to you, there's 1 or 2 that my eyes and my brain and my heart are gravitating towards. So I'm like, dude, they actually look pretty darn good. There's 1 or 2 that I'm kind of like, I'm not really interested in, but do keep in mind that's based off of a preliminary research. Obviously, my mind and opinion can change once we do the deep dive. And I'm gonna be honest with you, amigo to amigo, it breaks my heart, but it might be the last stock deep dive before October 15th. Because October 15th, that's the scheduled delivery day for my daughter. That's the scheduled C-section. Pretty excited at this point. I think going up to the 3rd trimester, I was so freaking scared, nervous, like, dude, I'm gonna be a crappy dad. I don't know what I'm doing. But now that there's like less than 5 days to go, I think I'm feeling more confident. I've been doing so much homework and studying on how to be a good dad, how to raise a child and everything. So pretty stoked, 5 more days to go. And as I enter this next phase of my life and this chapter of my book of life, I'm gonna be going on a very short paternity leave from YouTube, which is kind of unfortunate because if I don't upload videos, then I don't get paid. Whereas with like my corporate employer, dude, we used to give fathers 3 months of paternity leave that's paid. If I don't upload videos, I don't get paid. But I think in the grand scheme of things, I think everything will be okay despite the reduced upload tempo, because I'm hoping once she gets a little bit older, I'll be able to grind as hard as I used to. But we'll see. We'll play it by ear. But let me know which one of the BNPLs excites you the most. Now, with that said, I love you guys. Stay safe and good luck in the stock market. I'll talk to you really soon. Peace.